In 2016 and 2017, smart contracts and initial coin offerings allowed developers to build on Ethereum and increase the demand for the coin. And in 2020, the explosion of decentralized finance created a surge in usage and capital inflows for Ethereum. Each of those moments had one thing in common: a clear fundamental catalyst. And for most of the current cycle, that's been missing, at least until very recently. Believe it or not, a new potential catalyst may finally be emerging for Ethereum, and it's something we also touched on in our last Ethereum video. It's called the Genius Act, a piece of legislation in the US aimed at bringing regulatory clarity to stablecoins. This matters for Ethereum because over $130 billion worth of stablecoins are built directly on the Ethereum network. So, out of the roughly $240 billion total stablecoin supply, Ethereum hosts more than half, making it the largest infrastructure blockchain for stablecoins. And this dominance becomes clear when we look at this chart showing the distribution of stablecoins across different blockchains. Ethereum currently holds about 60% of all stablecoins in circulation. The next closest competitor is Tron, and even then, it holds less than half of what Ethereum does. With the Genius Act aiming to establish a regulatory framework for stablecoin issuance, the overall market is expected to grow significantly in the coming years. According to US Treasury Secretary Scott Bessent, the stablecoin market is projected to reach $3.7 trillion by 2030. From current levels, that would be over a 1,500% growth in the next 5 years. And because Ethereum is already the leading infrastructure for stablecoins, it's uniquely positioned to capture a large portion of that growth. More stablecoin activity means more transactions, more fees, and more demand for Ethereum, which translates into more demand for the Ethereum coin itself. So, if stablecoins become more widely adopted under clear regulation, Ethereum potentially stands to benefit both in usage and in valuation. However, one short-term overhanging risk to all of this is the uncertainty around the upcoming tariffs that could go into effect starting August 1st. Trump has already started sending out the official tariff notices, and if any part of this process surprises the market, it could lead to a short-term sell-off in risk assets like Ethereum. But given that a deal is already in place with China, which posed the biggest risk of escalation, the risk of a major market shock appears quite low. Regardless of how the tariff situation unfolds, though, it doesn't change the fundamental development that's occurred, from which Ethereum could see a significant increase in its demand, potentially leading to another short squeeze. This, in our opinion, could provide the necessary momentum for Ethereum to finally break through this critical $4,000 resistance level that's held it back from making new all-time highs this bull run.